Indian equity benchmarks Nifty 50 and Sensex hit fresh record highs in the morning session on Thursday, November 27th, as the domestic market experienced healthy gains amid positive global cues. The Sensex rose over 400 points to a record high of 86,000, while the Nifty 50 rose 0.30% to an all-time high of 26,300 rupees. Bank Nifty also hit a record high of 59,800 during the session. These are the 5 key factors that have contributed to the gains in the benchmark indices. Number 1 is the rate cut hopes from the US Fed and the RBI. The market is pricing in rate cuts from the US Federal Reserve and the Reserve Bank of India in December. The meeting of the US Federal Open Market Committee is scheduled for December 9 to 10th, while the Monetary Policy Committee of the RBI will meet on December 3rd, 4th and 5th. Both central banks may announce rate cuts by 25 basis points each, which will infuse more global and domestic liquidity, supporting market sentiment. The US Fed's rate may also weaken the dollar to some extent, which can trigger increased foreign capital inflow to emerging markets including India. Second reason could be the FIIs. With valuations, especially in the large caps, easing and prospects of earnings improving, foreign institutional investors have started buying Indian equities. FIIs have been net buyers for the last 2 sessions. In the previous session on November 26, FIIs bought Indian stocks worth 4,700 crore rupees in the cash segment. Third reason could be market discounting earnings growth. An important factor supporting the market is expectation of healthy earning growth from third quarter FY26 onwards. Experts believe that improved earnings will also alleviate concern over valuations in the mid-cap and small-cap segments, helping the market sustain its gains. Fourth could be the Russia-Ukraine peace talks. The prospect of a Russia-Ukraine peace deal has improved sentiment globally. As per reports, US envoy Steve Witkoff will be traveling to Moscow next week for talks with Russian leaders to find ways to end the war, which has turned out to be the biggest war in Europe since World War II. Fifth could be the technical factors. Amruta Shinde, technical and derivative analyst at Choice Equity Broking Private, pointed out that the Nifty 50 now finds strong immediate support in the 26,050 to 26,100 region, which has consistently acted as a demand zone. On the upside, as per Shinde, resistance has gradually shifted toward the 26,300 to 26,350 band, where selling pressure is expected to emerge and potentially limit near-term upside.